Hi everyone, Nick Shaheen here, Benzinga, create income with option spreads on MarketFi. Recapping week ending April 4th. And boy, ugly Friday today, and which way you slice it. Let's see if we can make some sense out of it and see what we're looking into next week. Usually I'll look at a recap, but as far as today's concerned, the summary is it was ugly all around, ugliest around the high flyers, and the Nasdaq obviously took a beating, down on a 2.5% or so. The S&P held up well throughout the day until it let go at the end, but it still held up relatively well, down about 1%. The Dow again tried to hold up as long as it could. Now there's, you can hear doom and gloom, or you can, listen to it and just zoom back out and see what happened really, or what is likely going on. I want to, usually I go through names, things I want to do next week, but before I do that, I want to make sure that I want to work on building a shopping list. Why do I want to do that? Because I want to see if we're going to stabilize next week, and if we were going to shrug off the fears of this Friday on 4-4, being the sell-off being a precursor to something much nastier to come. My opinion is that just to use an analogy, if the drivers are all on alert for accidents that are likely to happen, they tend not to happen because everybody's looking around. Everybody's building protection. Everybody's cashing in some gains, buying some puts. So usually we get hurt most when we get blindsided. It seems like everybody's waiting for this doom and gloom to come. Now, I'm still of the opinion that we need a black swan to trigger that major drop. That doesn't mean it can't happen over the weekend. Anything can happen at any point in time, but that's at any point in time. That's the point. Nothing that happened today is a precursor for me, because fundamentally nothing has changed. Okay, so we got the jobs number, and it says that we're still meandering thereabouts, 200,000. If we had come in with 100 or under 100 or negative, then I would understand that the fundamentals are completely upside down. But the fundamentals came in exactly as expected and in line with what was going on for the last year, which is the recovery is still going on very slowly. Therefore, the Fed's still going to be in it for a long period of time. And that's what drove the 2013 bull. So now we just need to realize that the fundamentals have not changed, and if we can just stabilize here, then we can build a good shopping list of some good names that have been tossed out with the bad. Okay, so for this week, let's just zoom out on some quality names that have been tossed with the trash. Just for before we get there, though, here's 10-day look at things. The worst thing about today, which is I didn't mention yet, is the fact that the pair trade that we've had that brought us down here rekindled, came back to life, and that just is the worst thing for me. What is it? It's the fact that the TLT and the yen are rallying and bringing down the markets and the 10-year. So the 10-year got killed today, and the yen spiked. So it's a tick for tick. If you look it up, it's tick for tick. The good news is that the yen still is well below last week's debacles that were much scarier. So hopefully this is a one-day event, and hopefully they'll come back in line next week on Monday. Now, if I look at the Nasdaq the last 10 days right here, it's not that far off, and it's not a disaster, although we did shave off quite a bit off of it. So 2.5% in one day on volume is pretty significant. And hopefully that blew off enough steam for it not to happen again on Monday. Here's the S&P, and we're still flattish for the last 10 days. We dipped, we ran, and then now we're right around the center. And as far as Apple's concerned, it held up like a champ. I say that, I know people will laugh, but it held up much better than many others. And people will run to it for safety. Unfortunately, it will not run up. I'll talk about that a little later, because they need a flying car out of it. Tesla, to me, represents all the momos, and even Tesla, yes, it's down gobs today, but the whipsaw within the days are incredible. So it still shows me that the appetite is still there, but it has no conviction. So it represents all the momos, but even then, it's not a complete disaster given where it's been recently. So all in all, it's not a disaster. All in all, I don't think it's foretelling of much of anything except some people booking some profits and positioning in case the doom comes. The small caps is another good indicator. Yes, we took a beating today, but it's still, to me, the fact that it took a beating just as much as a matter of fact, a little less than the Nasdaq is a good sign. I mean, it's a basket of 2,000 stocks. Now, I know people are running into value, so this might turn over as soon as we start to stabilize a little bit. So anyway, let's just jump into the shopping list I was talking about. The first thing I want to look at is okay. Let's tackle Google. I don't want to even bother putting it on here because the chart will look terrible. But I think if I can do Google L, we'll get these funky. Even the trading platforms have not adjusted yet. I think that the fact that it's split into two tickers is creating a lot of confusion, and the fact that Google is down almost 5% on one day with no news, I mean, that's worse than earnings. When it had that midday earning report one time, it didn't get down that much. But anyway, I think it's being thrown out definitely with the bad, but there's nothing I can do with it here except go long it via some options whenever I can. I know one of the tickers already has options and the other one does not. But even then, I'm going to wait until Monday to see maybe the platforms will represent it, better represent it. But in any case, I think today it's right around here. If you ignore all of that, if you still say it's one stock, it should be around here. So it's still holding that level here. Let me see if I can draw it. Okay, right about here. So it's holding that level even after today's beating. So there's value right there. I just don't know how to play it right now, so I'll wait until Monday to see what happens. I was mentioning Apple because, as far as value, it's as solid a company as it gets. So people will run to it for safety, but people are not going to run into it unless they have a headline. So yes, if I want to park money, I'm more comfortable parking it in Apple, say in something that's violent. But if the market runs up, it's not going to be participating on the way up the way something like Tesla would. So yes, yeah, I can park some money into it. But I'm not going to look to play it on the upside for a rebound. Now, a couple other names that I looked at today, and I usually do. I've been out of Visa and Mastercard just because they're headline stocks and with lawsuits, and I really don't understand the who's winning. It's hard to who's winning the legal fight. So the litigation aside, the last couple of candles, today's candle in both brings them back to pretty compelling levels. And now I'm going to start looking at them just for a rebound. They are excellent companies. I can't imagine, regardless of what happens with litigation, that they're going to be cut off. I mean, they're global companies, and so much depends on them and how they function. I think they're going to get their way when it comes down, the bottom end of things. Here is the look at Visa, which is probably even better looking than MasterCard, although it's a big candle and it deserves a little respect. Another one that I would play on the bounce would be Baidu. Yes, it is a Momo, but it's a Momo like Google is a Momo with meat. By that I mean it does have earnings and it does perform well and it's got the corner on a quarter of the world, so where Google isn't. So again, levels, not to add to my colorful, here's another level that that has been defended several times, and when it does rebound, it rebounds in violence. So if I look at symmetry here, there's a slide and a bounce and a slide and almost a bounce that failed, but it failed in 2 days, so I'm still hopeful there. But I don't have any positions, but if I see any stabilizations, I would be playing that on the upside for a rebound. Another Momo that has meat, like I just said, is Priceline. That's a heartbreaker. Look at the size of this candle, and as far as volume is concerned, I mean, this is volume around the size of around earnings reports. That is huge volume. So something happened today, hopefully flushed out a whole bunch of people. Again, this is a well-consolidated level. This level right here is well-consolidated. Let me see. I'm going to change the color to green. just for a good omen. It's spent a lot of time here. It got tested and it rebounded and went up, and it got tested again and rebounded, and today it just flushed way down. These are violent moves. So Monday, if the markets stabilize, it should gain another candle like this. It has a chance to. Let's put it that way. So debit call spreads might be in order for next week if you can get them cheap, if we stabilize on Monday. All of these are, I'm just creating a shopping list for my theory being correct as to this is not a market drop that everybody's expecting, but this is just a rebound. So frothy name, another one which is a little more iffy than all of these I've mentioned, is Amazon. This my box right here. If you've seen it before, I was saying, okay, it's going to defended it very well, almost broke out of it. Did break out of it one day, and then bam, everything fell off. And as far as drop, it's the longest since this one, and this one did not have a very fast and rebound, so I'm not fast into jumping in. This was another level that I had pointed out, but in case this is a head and shoulder pattern that wants, head and shoulder-ish pattern that wants to come to life, then there's lower. I mentioned in my write-up last week is that lower prices might be there. So I have no positions. I have no interest in jumping in, but I'm looking at it for a quick rebound in the debit call spread. Debit call spread to participate on the upside with very limited risk in case we stabilize. Now, speaking of crazy, because I have a few other crazy ones. Believe it or not, LinkedIn is one of them, and today it just got shellacked. I did participate on the downside, although I did close my puts way too early, so I left a lot of money on the table. But that offsets the losses I had in a debit call spread that I had. So unless it rebounds gobs of money, I'm out the debit call spread money. Regardless, this is the blue line that I wanted to talk to you about. As if nothing happened in the last year. Now this is the absolutely sobering chart of the day for me. As if nothing happened for LinkedIn in the last year. All that work that it did in order to legitimize itself as a company that makes money in the social media, gone in just days. So rebounds, if we stabilize, that's a good one to look at. I'm going to extend and zoom out on the 2 years to see where that level stands and where it came from. So this was the definite level from where it sprung the second time, and the first time was right down here. So this would, 2 year, this would take it back 2 years. I just don't see that we need to be that scared at this point, with nothing changing fundamentally, obviously fundamentally changing. So those are my thoughts. So that would be a good knife to catch via debit call spreads. Nothing to buy into right now, or credit put spreads or anything like that, until I get confirmation of stabilization. Another crazy one today held up better than anything I expected, which is Lulu. I have not traded Lulu because it's been ugly and didn't treat me well. So right here, it's looking like it's wanting to break out. But this has been a roof for it, unscientific roof. But being green on a day like today, I can just imagine what's it going to do if markets stabilize on Monday. There's still this to cover as far as open gap on the upside. So lotto ticket there might be good on the upside if we stabilize on Monday. Netflix, I heard somebody on TV cover saying that it's holding up much better than other stocks like Amazon. Okay, maybe. It's what concerns me about Netflix is this period right here. This chug of sell, 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 sell. Even before the big market sell-off happened those couple of days, it was like red, 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 red. Somebody is liquidating in there. Uncle Carl, somebody. So I'm not about to catch that knife. I did have this level as being okay, attractive. First of all, it's pretty close to it, but I'm not going to jump in front of it. So I'll wait for confirmation that it actually did stabilize before I jump into it. But if somebody wants to buy a lotto ticket, I won't fault you. A couple of caution notes. Goldman Sachs, it's a good company. I like to invest in it on bad days, but not today. I see 3 falling peaks, maybe not 100% technically correct, but Nevertheless, if they are harbingers of more to come, I'm looking under 160 is very possible next week, if especially if the markets don't hold up well. Head and shoulderish everywhere. I don't know where to look at, and if I extend to more than 1 year, it's a scary chart. So I'm not about to jump into that name as much as I like it as a company. Okay, so that was one caution, and then the other cautions are I have a set of them. CRM, BlackRock, VMware. I'll jump into BlackRock. I had a write up on it last week. As a matter of fact, maybe as early as yesterday, saying that I would play debit put spreads here because it's looking like it wants to break down again. This is a level where it cannot break recently. So if things still go badly, I mean, that would be one place I would play the other side of it. CRM is another one where I've been cautioning since the earnings, and I know Kramer has been saying, okay, this is a knife you can catch, and he caught it, and he had 2 good days with it, and then it just bit him right back in a day, and then it has sold off since then. I see a possible, a sub 50 price here, especially if we don't stabilize. Company is good. I just don't think it's the environment to try to catch that knife, and the same goes for VMware. Um, Yesterday I said it's looking like it's trying to break out, but there's a roof above it right here. I mean, that's a heck of a run. I mean, if you haven't booked your profits here, you're just mistaken. So right now back to where it sprung from which it sprung, from where it sprung. Hello. So you be the judge. I'm out of that name completely, and I just enjoy watching it. So again, the news, the lesson is for next week is watch what happens at the open and watch how we behave after the open. If if we hold a pop, then that's good. But if we repeat as today did, where we open strong and then we just give it up and then continue on down, I would just protect, 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 protect. There's no need to be a hero. Now, one positive thing that happened today is that on the SPX, there was, I have, based on the open interest in the SPX expiring this week, I had a few levels. One thing I was 100% sure of is the 190 was a wall this week, and I did short it at there, so that was a nice little gain for me. But I would have rather been wrong on that one and not have a day like today. But I was sure that it wasn't going to breach 1900. And I took the bet on 1905, 1910 credit call spread. But the thing that I had other levels I was working with, and once we lost to 1870, 1865 exactly would be the best place for market makers to close it and expire it to hurt the most option holders. So it could be that the last leg down in the SPX was just to flush the market and hurt as many option holders as we can. That's just theory. That's hopium, just so I can leave into the weekend on a positive note. So again, I knew that the 1900 was a wall and we weren't going out of there, and then the fact that then we started creeping down, and it was like I'm looking at the 1850, which had the highest open interest all by itself. I was like, I don't want to even tweet it because it's just I don't want to be the guy who's going to say, "Hey, look out there, 1850 is coming." But then I'm looking at it, and then I started doing a 7 wing open interest summation, and 1865 is the highest one. At 1865, it would hurt the most within 7 wingspan as far as spreads are concerned, $5 wide. So, maybe that was just a matter of market makers trying to hurt some people out there. Okay, as far as that's concerned, caution is warranted. Fundamentals have not changed. Don't try to catch falling knives that have 2-inch handles and 12-inch blades. If you want to try, if you're compelled into catching a falling knife, catch quality name via longer dated calls. Like, for example, I could buy leaps in Google or Apple calls, so 2015 January, say, and then I can start putting them to work by selling against them shorter term calls, not requiring any extra margin. And this will reduce my entry point as far as cost and will give me some room to breathe and some time in order to see if my theory is correct. Have a good weekend, everyone, and I appreciate your time. Sorry for the long note.